Hey everyone, welcome back to Commodities with Sam. The gameplay's rolling in the background, and today we're diving into the oil market outlook for 2025, supply, demand, prices, and where this commodity could be heading. Let's break down what is happening and what it means for us as investors and traders. As of May 2025, Brent crude is trading around $65 per barrel, while WTI is at approximately $61.50. These levels are relatively stable but reflect a cautious market. So what's shaping these numbers? On the supply side, global oil production is rising. The International Energy Agency projects a 1.6 million barrels per day increase in 2025, bringing total output to about 104.6 million barrels per day. Most of this growth is coming from non-OPEC plus countries like the US, Brazil, and Canada. Meanwhile, OPEC plus is carefully managing its supply strategy. They've been gradually raising output, 411,000 barrels per day just in May and June, with more expected this summer. Saudi Arabia, interestingly, is refining more crude domestically and exporting less of the raw product, helping stabilize prices even as global supply increases. On the demand side, we're seeing slower growth. Global oil demand is still climbing, but the pace is cooling. Only around 740,000 barrels per day of expected growth this year, according to the IEA. That's a big shift from the post-COVID surges we saw in 2022 and 2023. The rise of electric vehicles, energy efficiency improvements, and slower economic growth, especially in China, are putting a lid on consumption. In the US, the shale industry isn't booming like it used to. Production costs are higher, and capital spending is tighter. The latest outlook suggests a potential drop in US output to 13.3 million barrels per day by 2026, marking the first decline since the 2020 pandemic crash. This is partly due to material tariffs, labor shortages, and investor pressure to prioritize profits over production growth. So what's the forecast? The U.S. Energy Information Administration expects Brent crude to average $65.85 in 2025, dipping to $59.24 in 2026. JP Morgan's even more bearish, calling for $66 this year and just $58 next year, citing a growing supply surplus and weaker global demand. Now, what does this all mean for you as an investor or trader? We're in a sideways to softening market. There's still opportunity, especially in volatility plays and refined product spreads. But chasing massive upside in crude might not be the move right now, unless geopolitical tensions flare up unexpectedly. Keep an eye on inventory reports, OPEC meetings, and U.S. shale capex announcements. Bottom line, 2025 looks like a year of careful navigation. Supply is rising, demand is steady but slowing, and prices are stabilizing. It's a trader's market more than a long-only investor's one, so stay sharp. As some of you may know, I write a report on the commodity markets designed to save investors and traders time and effort on market research and decision-making. If that sounds useful to you, check it out in the description of this video. If you found this breakdown helpful, make sure to like, subscribe, and drop a comment with your thoughts on where oil is heading next. See you in the next one.